Okay, guys, welcome back to another training session with my students. Today, like I told us in the chat in our WhatsApp group, I have just signed on to the free version of the trial challenge of the FTMO company. Okay, so FTMO, guys, of course, you know that they are prop fund company. What they do is that if you are a good trader and you pass their challenge, okay, they will give you free fund to trade. Okay, then then you will now have to be profitable for a certain rate of successful trades. Then they will now make sure that they will disburse a sizable amount of that fund to you. I think there's a sharing formula. We're going to look at that later. I don't want us to deviate from what I want to achieve in this video. What I want to achieve, guys, is for us to look at the trade that I took to start this challenge. Okay, so guys, without wasting much of our time, let's dive into MetaTrader 4. All right, so guys, this is FTMO demo account MetaTrader 4. I opened this account yesterday. If you look at it, you'll see that the account size is $50,000. Okay. Well, when I opened the account, immediately I did my trade setup the usual way we do it, guys. The usual way I teach you guys. Okay. So when I review the market, I did analysis of the market. I started from the weekly time frame. I saw that the market has resumed an upward trend, from this level, okay, from this price point, okay. When I saw that, what I did was that I dropped down to the daily time frame to see what the market is doing. But again, before I go to daily time frame, guys, there's something I want to explain to us here. You see, if you look at this market structure, you see that it is overall bearish, okay. But you see, because of the time frame, it's a weekly time frame, take the immediate trend direction. That is what you should use to determine what your directional bias will be. Okay, so the immediate trend direction here is that the market is trending up. Okay, now this other structure here, happened very long time ago. Okay, even though you might argue that the market is pulling back, okay, it's retracing. Fine, if it is retracing, we can also trade in the direction of the retracement. Like I told us, you must be very, very skillful and proficient in trading before you can trade pullbacks, okay, or retracements. So this is actually a retracement move, because if you see what the market has done here, this is a bearish trend, this is a downtrend, okay. But at this point, okay, starting from this price point, let me show you guys. Starting from this price point, that is in October 2022, okay, the market started trending up. All right, so guys, so what I did was I took my major key levels, I took my weekly levels here, okay, and here, okay, and at this price point, okay. So after doing that, I dropped down to daily time frame and I looked at what the market was doing. Okay, when I went there, at daily time frame, I saw an interesting setup, okay, that tells me that this market has started a new trend, okay, to the upside. Okay, this is a higher low, higher low, higher and higher low, and I've seen that the market has consistently not been able to break the previous lows. So that means that the market has resumed an uptrend. Okay, so that in mind, and I dropped down to 4-hour time frame. Okay. Now, when I came down to my 4-hour time frame, I saw a channel structure, also showing that this market has resumed an uptrend. You can see this bullish channel is an indication that this market has resumed an uptrend. So what I did was that I said, okay, I didn't want to enter from 4-hour time frame, guys, because I wanted to immediately start rocking the market. Okay, so I laid out my charts, pumped in my moving averages. These moving averages are just guide to structure, okay. Now, when I put in my 200 and my okay, and my 50 moving averages, I saw that this market is actually trading up because price is moving above these two moving averages. So that tells me that I should be looking for a buy opportunity in this market, okay? So I dropped down to 1 hour time frame and saw that the market was still, consistent with the observations, I picked from the higher time frame. So I saw an opportunity here. The market was actually at structural level, then I put in this, this horizontal support line, the horizontal support resistance line here. Okay, but at this point is the support line. Then I met price at this point here, okay? So that was yesterday morning at about 1 a.m., Nigerian time. So I saw price here, but I couldn't do anything because I was waiting for a bullish signal. I looked at this bullish engulfing candlestick. I knew that price was going to pump up, okay? So what I did was that I decided to wait, all right, till I can trade the London session. I don't trade the Asian session or Asian breakout. I don't trade those strategies. What I trade is London or New York, okay? So I had to wait for that time to come, say 8 o'clock Nigerian time, 8:30, was actually when I started looking for an entry opportunity in the market. And when I saw it, I started planning out my trade. I plan my trade just like I teach us. I don't want to go into all those details. But those of you who are my students, they know how I trade that market, okay? So right now, let's look at what this market is doing. So when I saw that market was trending in between these, channel structure levels, I mapped out other structures in between using my Fibonacci retracement tool, okay? Then I also saw that there are some key areas here. That was why I brought out this rectangle box here, this blue rectangle box. I saw that market has been resisting, price has been resisted by this level here, this zone here. So when I marked it out, I knew that when price gets here, it's going to bounce back, okay? So the mistake I did was that I would have taken some partials, okay, when the price got here, but I didn't do that on time, so the market pulled back. I took some partial though, but I would have done that a lot more earlier, okay, when the price was up here. So guys, that part. So later on, when I saw that the trade was going to pull back, I took some partials, moved my stop loss to move my stop loss behind my entry price, okay, just to reduce my overall risk in the trade. So guys, I continuously managed this trade up to this point, and shortly before I could reduce the loss, the market pulled back and hit my stop loss. That's not the problem. So when I checked the outcome of the trade, I saw that I made some marginal profit, okay? Now guys, this trade has not ended yet. I'm still observing the market. I'm expecting market price to pull back the structure here. I'm looking for a double bottom here. If I see a double bottom here, I would enter another buy position, okay? I'm waiting to see price do this, okay? I'm waiting to see price do this, and I would take another long position, okay? So here I'm looking out for a double bottom, okay? When I see a double bottom chart pattern, okay, I will enter another long position, with tight stop loss, okay? Then I would manage to trade all through until it gets to this level again, okay? So but by this time around, I will not allow it to, I will not allow those winning trades to go into losses, okay? I will try as much as possible to either close the trade or take reasonable portion of the profit, guys. So this is what I'm going to do in this second trade opportunity that I'm looking out for, okay? So guys, this is how you trade the market. Now, the other thing is this. There was an opportunity, guys, to to look at the fundamental window, okay, to see what the news are saying. But when I went to Forex Factory, I went to the calendar. I looked at the calendar and saw that there was no impactful news, coming out today on euro and the dollar, zone. So that wasn't a threat to me, okay? So when you look at the forex factory, you see that today being Monday, there is there's no impactful news from the US and from the Euro zone, okay? So that made me, shelve the fundamental window of looking at any other opportunity that could come, that could impact negatively on my trade. All right, so guys, that is how this trade went. And if you look at the result here, you'll see that I was able to make some profit, $29. Okay, I took this from the partial, and this hit my stop loss. So guys, that is how you trade. Okay, so guys, if you look at continue from where I stopped. The record and just stop abruptly. Okay, so guys, what I was saying is that I looked at forex factory and I didn't see any impactful news. Okay, so I continued. Okay, and continued looking at the technicals. Okay, so all eyes here. I expect price to pull back to structure here, and when I see a double bottom, I'll begin to look for another opportunity, to enter. What are the opportunities? I want to see bullish candlestick patterns, okay, and perhaps some other confluences from the technicals for me to take a trade decision on what to do next. Okay, so guys, this is how you do this thing. Okay, trade cautiously. Make sure you follow your plans. Okay, there is always need for you to journal your trade. The reason is because when you journal your trade, you know where you make mistakes, you know where you should improve on your trade, and you'll be able to keep a record of the trades that you took, and keep a good accounting of the money you made or the money you lost. Okay, so make sure you observe strict risk management rules. Okay, don't expose your account above 1% of your capital. Do not do that. Okay, stick to your rule. Simple trading strategy, support and resistance, market structure. Okay, what again? And perhaps smart money. Okay, or other block trading strategy. These are the strategies that I'll be using, to pump this market further. Okay, all right, guys. Thank you very much, and have a wonderful day. Bye bye.